In this video, we cover market volatility from recent tariffs, global trade risks, and our view on recession probabilities. You'll hear about portfolio positioning, investor behavior, and global shifts. Plus, we highlight three key growth drivers for 2025. As always, we close with what this means for your long term strategy and financial peace of mind. The new wave of reciprocal tariffs, some as high as 46%, marks the most significant U.S. trade escalation in decades. While intended to support domestic manufacturing, the broader economic impact remains uncertain. Investors should know that uncertainty itself is the key risk, often driving volatility more than the tariffs. We're closely monitoring policy developments and adjusting strategies where warranted. Markets reacted sharply to the April 2nd tariff announcement, with the S&P 500 dropping 4.8% and the Nasdaq down 6%. Historically, uncertainty around economic policy has coincided with market corrections and long-term buying opportunities. Our disciplined, diversified strategies help manage volatility and keep our focus on sustainable growth despite short-term fluctuations. While a recession is not our base case, the probability has increased slightly amid sticky inflation, slower growth, and waning consumer sentiment. We recognize that policy uncertainty can temper economic activity, and our approach is designed to weather these risks. Our commitment is to build resilient portfolios that can endure periods of economic stress while remain poised for future growth. International tensions and regional policy shifts are reshaping investment landscapes. Europe's surge in defense spending and fiscal stimulus, alongside trade headwinds in Asia and North America, underline the importance of a global outlook. We're actively seeking opportunities outside the U.S. and monitoring fiscal policies worldwide, ensuring that our strategies reflect the evolving global market dynamics. Staying the course is key. Data shows that consistent investing, even during downturns, outperforms panic withdrawals. Historical trends reveal that reinvesting on market dips can significantly boost long-term returns compared to pulling funds out. We guide you to remain focused on your long-term goals, ensuring that emotional reactions to policy noise do not derail your investment strategy. Many of our portfolios are anchored in U.S. companies with strong balance sheets and a focus on technology-driven growth. As tariff-related uncertainty grows, we're closely evaluating exposures to sectors more sensitive to global supply chains, particularly consumer goods and tech hardware. We are shifting focus toward companies with pricing power, domestic demand resilience, and clear input cost visibility. Additionally, we're exploring select international opportunities, especially in regions where fiscal stimulus and defense investment may drive relative outperformance. Our goal is to stay proactive while maintaining alignment with each client's long-term objectives. We see three trends driving U.S. stock market growth in 2025. Artificial intelligence continues to be a key structural force, reshaping productivity and investment across various sectors. BlackRock has described AI as a megaforce, driving earnings beyond just the tech industry. U.S. equities remain overweight due to this trend, with companies showing strong earnings growth supported by robust AI adoption. This trend is expected to underpin broader market strength in 2025. Large-scale government spending is boosting growth prospects. Germany's 500 billion infrastructure plan, alongside increased U.S. investments in infrastructure and defense, is having a global ripple effect. These fiscal moves reinforce expectations for a higher for longer interest rate environment, supporting cyclical sectors such as industrials and construction. This trend bodes well for earnings durability across these industries. Many banks are poised for a rebound after a challenging 2024. CFRA projects revenue growth of 6 to 7% and double-digit earnings growth in 2025. With deposit costs stabilizing and improving loan growth, confidence in the bank industry is returning. In these dynamic times, our commitment is to keep you well informed and positioned for long term success. Whether it's navigating tariff uncertainties or capitalizing on emerging trends like AI and infrastructure investments, we are continuously adapting our strategies. We remain focused on diversification and risk management, ensuring that your portfolio is robust against short term volatility. Thank you for your trust as we work together toward a secure financial future.